Hello students, in this video we will see what is financial market, okay, its types and the instruments that are used out here, okay, and many more. So let us see. First of all, what is financial market? By financial market we mean a market just like the commodity market, okay. It's a market where you can purchase and sell the finance, okay. So there can be various means of getting the finance, right? So by selling shares, debentures, bonds, and other securities, we get the money, okay. And the money, it can be, have the like both the aspect, that is money, I mean the general liquid money, okay, and the other term as the capital, okay. Now this together, it makes the finance, isn't it? So as we already know that finance is the lifeblood of the business. So financial market is a market which includes the market of stock, bond, forex, okay. By forex we mean the foreign exchange, okay, and the derivatives market, okay. This derivatives market and stock market, they both are quite similar to each other, but in the derivatives market the risk is very high, okay, and the return is also very high, okay. So those who are the adventurous investors, they can invest in the derivatives market, but to invest in the derivative market you must have the proper knowledge about the market, okay. Now that's a financial market, okay. Now financial market, what are the functions of the financial market, okay. So now the first function is the mobilization of savings, okay, and channelizing them into most productive use. Now see, an investor, okay, if he or she invests in the market, then that investment is out of the savings, isn't it? So that saving is converted into the investment. So now whatever the saving that has been made by a person can be channelized into the most productive use through the financial markets, okay. Now the second function, it facilitates price discovery. By price discovery we mean that the amount of money, it can be used to purchase varieties of commodities of various price tags or price levels, okay, in the financial market, because one share, it can be rupees 10, okay. So it can have a nominal value of rupees 10, okay, and the share of a particular company, it can have a nominal value of rupees 100 to 1000 or maybe 10,000. So okay, so here in the financial market the price discovery is possible. Now, the third function provides liquidity to financial assets. Now, the financial assets are marketable securities. Okay, for example, current investments. Okay, so now this current investment, it can be converted into a liquid money. Okay, so like just like the bonds, okay, and the gold bonds, okay, or maybe the gold only. If you have invested any money in the gold, okay, so that gold can be converted into a liquid cash, okay. So it provides liquidity. Now the fourth function is the reduction of cost of transaction. So now here in the financial market the transaction can be made uh, through online also, okay. So here the transaction cost is also reduced. It is possible, okay, in the financial market, okay. Now classification of financial market. uh, Number one, money market, and number two, capital market, okay. So money market is a type of market which provides a short-term fund, okay. So the maturity period here is less than 1 year, okay, or up to 1 year, okay. So this money market is a type of market which provides you the short-term finance, okay, uh, which has a maturity period of less than 1 year. Okay, for example, if you are using a credit card, okay, so then that's an example of money market, because within 45 days to 50 days, okay, you have to refund the money back, isn't it? So if you have taken loan from a person or from a market where you have to make the repayment within 6 months period, so then it is a example of money market. Now capital market. Now, capital market is a market where you will get the long-term funds. Okay, so it includes all the organizations, institutions, and instruments that provides long-term and medium-term funds. For example, if you have taken a loan from bank, okay, for a term period of 5 years, okay, so then it's an example of capital market. Okay, so the loan can be taken for education purpose, okay, or for the making of house, okay, so that's an example of capital market. Another example of capital market, for example, we have already seen this in the accountancy chapter, okay, issue of debentures, okay. So the debentures, they are regarded as the external liabilities, and the debentures, they are to be redeemed after a certain period of time, and they are redeemed mostly after 3 years or 5 years or 7 years, or maybe sometimes it is to be redeemed after 10 to 15 years, isn't it? So if you are issuing number of debentures, then it's an example of capital market. Again, now if you are issuing the number of shares in the market, be it preference shares or equity shares, then it's an example of capital market. Now, features of money market. Now, number one feature, market for short-term finance. Okay, so it's a market which is generally for a short period of time. Okay, now no fixed geographical location. Now for money market, there can be no fixed geographical location, because the money market, it can float from one place to the other place. Okay, so it may not have the a proper physical location. Okay, so it's all related to the infrastructure that has been built by the uh, government of a particular country. Okay, so it depends upon that communication and the method of technology that are used in that particular place. For example, like in India today, it has been very much easier for us to make the payment through UPI, isn't it? Nowadays we are using Paytm, this Bheem app, Phone Pay, Google Pay. Okay, so we don't have to go to ATM all the time to withdraw the cash. Okay, if you want to pay someone rupees, say 28 rupees, okay, and you don't have the cash with you, okay, and you cannot disburse the amount of rupees 28 from the ATM, isn't it? Hardly nowadays we can withdraw 100 rupees from the out of the ATM, isn't it? Normally, the note, this currency note, rupees 500 is available in the ATM, isn't it? So if you have to make the payment of rupees 28 to someone, then you don't have to go to the other place. I mean the ATM. You can pay the shopkeeper or vendor directly out of the UPI, isn't it? So similarly, the money market, it doesn't have the geographical location. Okay. I just give you the example from the point of view of UPI payment. Okay. Similarly, you can have the transaction in money market as well. Okay. Now, major institutions involved in money market are RBI, okay, and commercial banks, be it LIC or GIC. Okay, GIC stands for General Insurance, okay, and LIC for the Life Insurance, okay, Life Insurance Corporation, General Insurance Corporation. Okay. Now, the common instruments of money market are call money, treasury bills, okay, CP, that is the commercial papers, okay, CD, that is certificate of deposits, and commercial bills, etc. Okay, so let me just tell you in brief what is call money. First of all, now call money is a type of short-term finance, okay, which is repayable on demand. Okay, so by repayable on demand, we mean that whenever the person, he or she, calls up the money, okay, you have to make the payment. Okay, and this type of it's a kind of a loan, okay, but it's a very short term loan. So the maturity period of that loan, it can range from 1 day to the next 14 days, 14 days, 1 day to 2 weeks. Okay, so within a span of 14 days you have to make the payment. Okay, that is known as the call money. Now treasury bills are actually the kind of a promissory note that is issued by the government, okay, with a guarantee that your money will be paid. Okay, so similarly your commercial bills, commercial papers and certificate of deposits are there as the instruments of money market. Okay, now features of capital market. Just like we saw the features of money market, let's see the features of capital market. Now it's the link between the savers and the investment opportunities. Okay, just like uh, I mean this function of this financial market. So it's a mobilization of savings and channelizing them into most productive use. So it's the same thing, link between savers and the investment opportunities. Okay, now it deals in the long-term investment. So the investment out here is made for at least 3 years, okay, 4 years, 5 years, okay, minimum it can be 2 years, okay, but not 1 year, because a 1 year scheme is available only in terms of the money market. Okay, but the span of investment in this capital market, it is beyond 12 months. Okay, now it utilizes intermediaries. Now what do you mean by the intermediaries? By intermediaries we mean actually uh, the channels, okay, or the means, okay, or the persons that are involved in the capital market. Because in capital market, if you want to purchase a share of a particular company, okay, so you need to go through a particular channel. So in that channel you will meet an intermediary. Okay, so by intermediary we mean the brokers, okay, we mean the bank, okay, and some agents are involved out there, isn't it? So these are known as the intermediaries. Okay, now determinant of capital formation. So for example, if a company is issuing 50,000 shares in a market with a nominal value of rupees 10, okay, so 50,000 into 10 will be how much? 5 lakh. So when you issue number of shares in the market, so it actually you know it's actually for the purpose of creating or raising the amount of capital in the market, isn't it? So it is how this capital market, it determines the capital formation of a particular company. Okay, so now we have to cope up with the government rules and regulations. Okay, we must respect, and all the companies must abide by the rules that are being set by the government, okay, of a particular country. Like in India, the Indian government, along with the help of SEBI, okay, Securities Exchange Board of India, it monitors and tries to protect the rights of investors. Okay, but however, some kind of some cases of fraudulency are there. Okay, so that's there in the market. Okay, we cannot help it out. Anyway, now the types of capital markets. So what are the components of the capital market? Now first, primary market, that is the new issue market. So in this market, securities are sold for the first time. Okay, so if a company has been incorporated recently, okay, and is issuing number of shares for the first time in the market, so then that is known as the primary market. Okay, so the new share that is sold in the market for the first time, so that is known as the primary market. Now methods of flotation. So now the security may be issued in primary market by the following methods. Okay, so what are the methods? The public issue through prospectus. Okay, so normally the shares are issued through prospectus only. Okay, and the other are offer for sale. Okay, then private placement, then right issue. Right issue, it's only for the existing companies. Okay, and EIPOs. By EIPOs we mean electronic initial public offering. Okay, so IPO stand for initial public offering. Okay, so E stand for electronic. Okay, now these are the methods, okay, in which the in which I mean in this primary market, okay, you can use the following methods to issue and to gain the amount of capital in the market. Okay, and now in the secondary market, that is the stock exchange. Okay, so in the secondary market, the purchase and sale of previously issued or the second hand securities take place. Okay, just like the Bombay Stock Exchange. Okay, so you are buying and selling the existing number of shares. That is the second hand. Okay, securities are being sold and purchased. Now, what is stock exchange? Since we are talking about the secondary market, now it's very much important for us to understand stock exchange. Now, stock exchange, it is an organization or body of individuals, whether incorporated or not, established for the purpose of assisting, regulating, and controlling of business in buying, selling, and dealing in securities. Okay, so this is known as the stock exchange. So it's actually uh, an organization or a group of individuals. Okay, so which uh, may assist in buying and selling goods and services. Okay, so now in a stock exchange, it's just like a city center. Let's just talk about a city center. Okay, so now in city center, if you go inside, okay, the first of all you will be checked by the security guard. Okay, and then the sales executives, they come and they assist you. Okay, so which type of cloth? Okay, then they will guide you where is the uh, trial room. Okay, where is the cash counter? They will guide you through, isn't it? They will help you, they will assist you in doing the shopping. Similarly, in a stock exchange, there are some type of operators. Okay, so who will help you uh, in the stock exchange market are brokers, jobbers, bulls, bears, and stag. Okay, now the functions of stock exchange or secondary market. Now, economic barometer. Now, what do you mean by economic barometer? Now, first of all, we must try to understand what is the economic barometer. Now, what is this now, economic barometer? So it's actually, it's actually a kind of a measuring scale. Okay, so it measures the country's economic growth through economic activities and the uh, number of stocks or number of shares that are being sold in the market. You must have heard that Sensex, okay, the stock market has crashed. Okay, now the Sensex is peak high above 40,000 points. So it's actually the measurement. Okay, so it actually measures your economic growth. Okay, now pricing of securities. Now in stock exchange, you like you are being provided with the price of a particular security. Okay, for example, if you are purchasing the shares of Geo. Okay, however, it's not possible for us to get the shares of Geo. Okay, so let us suppose that the shares of Geo, one share is about rupees 5,200. Okay, so that is the pricing. Okay, that is being fixed by the stock exchange. Like if you go to a market, okay, be it Champasari market or be it any kind of sabji mandi, okay, you take it. Okay, so out there the prices are fixed through price mechanism, isn't it? Through the interaction between the demand and supply, isn't it? So that is your pricing of securities. Just like in the commodity market, we fix the prices, okay, of various types of commodities through the interaction between the demand and supply. Similarly, in the stock exchange market, we also fix the price. Okay, now the function of stock exchange is to make sure that the transactions are safe and sound. Okay, so it gives you the safety of your transactions. Okay, now it contributes to economic growth also. How does it contribute to economic growth? Now, this contribution is made in such a way that it creates and generates amount of capital stock in the market. Okay, so if the capital stock is increasing in an economy, we mean that economic growth is also achieved. Okay, now spreading of equity cult. Now, what is spreading of equity cult? So what it is? Spreading of equity cult. Now, first of all, we should try to understand that it's all about the investment. Okay, it's all about the ownership. It's all about making people aware about the investment, okay, and encouraging them to uh, invest in the market. Okay, so it's actually the spreading of equity cult. Okay, so it's the this cult is a kind of a, some kind of tantra mantra, whatever they do, isn't it? You must have seen in some kind of videos, okay, like kala jadoo and all, isn't it? So they are doing it. So similarly, in the stock, I mean, the function of the stock exchange or the secondary market is also to uh, provide the same thing, okay, that is to spend more and more in the secondary market, that is to invest. Okay, it's not actually the spending of the money, but it's actually the investing of the money, isn't it? Now, providing scope for speculation. Now, you must have seen that in the morning, if you purchase a share, okay, only one share, let us just assume that. Okay, so if you have purchased a share for rupees 100 and by the evening it went down to rupees 87, okay, but just now you came to know that inflation, okay, inflation in the market is about to happen at the rate 10%. Okay, so which means that from tomorrow onwards, your price of share may increase, isn't it? So it may go up to 150 or it may go up to 200 also. Okay, so it's actually the speculation. Okay, you are going to speculate. Okay, so this is how the brokers, okay, in the stock market, they come to know that which company's share is going to increase and which company's share is going to deplete or decrease. You must have watched that uh, uh, web series, that Scam 1992, isn't it? That Harshit Mehta. So he speculates, okay, he forecasts thing, okay, that tomorrow this company's share is going up, okay, this company is going to make money tomorrow and this company is going to lose. So this is about the speculation, okay. And liquidity, just like we discussed before also, that this market is highly liquefiable. Okay, for example, if you purchased let's say shares for rupees 1 lakh, okay, now you want money immediately, okay, within a span of 3 days, okay, but you don't have the cash with you. So what you can do is that you can sell your number of shares immediately in the market, okay. So this money is full of liquidity and better allocation of capital. Now if you have kept the money in the bank, okay, let's say 1 lakh rupees, okay, now that money is in the bank, it's safe and sound. Yeah, you will be getting some portion of interest on your amount, on your deposit, but if it could be invested in the market, then it could have been used for some kind of other purposes. However, the bank will also do the same thing, okay. Bank will not keep your money, okay, with themselves, okay. They will give you the money to someone else, okay. I mean, they give the money to someone else, okay. We have already seen this in the chapter, this commercial banking. Okay, I'm talking about the economics part. Okay, in macroeconomics, if you go to the particular chapter, banking, you will see how the money is multiplied or created. Okay, so money multiplier, isn't it? So you know that. Okay, so what's the formula? The formula of multiplier is 1 by LRR. That is the legal reserve ratio, isn't it? So if you invest the money in the market, then it will be better allocated. Okay, now promotes the habits of savings and investment. So the function of a stock exchange, first of all, it will spread the spread the equity cult. Okay, it's all about the um, spreading news. Okay, making general public aware about the equity cult. It's all about the investment. Okay, making people aware about the investment, and it promotes the habit of savings and investment. We already know that in economics, again, that the savings is converted into investment. Okay, so we must have seen in that particular chapter that S is equals to I, isn't it? So it's all about that equilibrium part. Okay, So how the equilibrium is achieved? So there are two approaches. One is AS is equals to AD. The other one is S is equals to I. So this is the approach of S is equals to I. Okay, so now we are talking about the savings and investment. Okay, I'm sorry, I'm going little bit economics also, because things are related to each other. Okay, so in commerce, if you are studying economics, okay, economics is associated, it's related with business studies. Okay, and again, few topics and few concepts are also related with your accountancy. Okay, so the three main core subjects are interrelated to each other. Okay, now how the trading it takes place in the stock exchange market. First of all, you will select a broker. Okay, a broker can be a physical person or a group of an individual. Okay, a broker can be a bank also. Okay, nowadays the function of broker is provided by the bank, like Axis Bank. Okay, then HDFC, ICICI, State Bank of India. Okay, Punjab National Bank. Okay, so Bank of India, Yes Bank, etc., etc. Okay, so first of all you will choose, okay, your broker, and then you will place the order. So by placing of order, we mean we will order for a particular number of shares. Okay, I want to purchase 5 shares of this particular company, 3 shares of that particular company. Okay, so this is how you will place the order. Okay, and after placing the order, that order will be now executed. I mean, the process of supply or delivery of your order will happen now. Okay, and finally, the settlement. Now, in settlement, what happens is that you will be given a certificate that your order has been placed and you have purchased a certain amount of shares successfully. Okay. Now, what are the benefits of online stock exchange? Now, demutualization and dematerialization. Okay, so now what is demutualization? Now, first of all, this is a very, it may seem that this is a big concept, okay, but it's not so. Okay, by demutualization, we mean in which a customer-owned mutual organizations or cooperative changes legal form to a joint stock company. Okay, now here it's actually a process. It's actually a process through which a customer owned, okay, or the mutual, okay, organization. Okay, for example, you and I have the mutual organization. Okay, it's like a partnership. Okay, or a cooperative changes legal form to a joint stock company. Now a company, now by demutualization we actually mean that any kind of mutually owned firm can be converted into a joint stock company. Okay, a partnership can be converted into a joint stock company. Okay, now the next part is dematerialization. Now what is dematerialization? Now this dematerialization, it means actually the process by which a client can get physical certificates converted into electronic balances. Okay, so now normally what happens is that whenever you purchase uh, physical whenever you purchase certificates, okay, I mean the shares, okay, you get a certificate. Okay, you get a particular certificate. Now by dematerialization, we mean that the conversion of this physical certificate into an electronic certificate. Okay, or conversion of the same into the electronic balances. Okay, it's very simple. Now all India level stock exchange has two parts. Okay, now National Stock Exchange of India, okay, NSEI, and OTCI, that is over the counter exchange of India. Okay, now the common features of NSEI and OTCI are: number one, nationwide coverage. Okay, so they will cover the nation, the entire nation. Okay, now the ringless, okay, and screen based trading. Okay, and then the transparency and incorporated entities backed by financial institutions. Okay, now this, let's just talk about them. NSCI was recognized in the year 1992, scam 1992, okay, and it started working in 1994. So it launched the capital market segment in November 1994 and option segment in June 2000 for various derivative instruments. Okay, so as I already said, that derivative instruments are very dangerous. Okay, if you are an adventurous investor, you can invest in the derivative market also. Okay, so now the objectives and the nature of NSCI are: number one, securities traded, okay, that is capital market as well as money market, and the payment and the delivery in 15 days time period. So this NSCI, it is both the composition of capital market as well as money market. Okay, now OTCI, this was incorporated in the year 1990, okay, and the trading started in this exchange in 1992. Again 1992, scam 1992. This exchange was established on the lines of Nasdaq, the OTC exchange in USA. Now the objectives and the nature of OTCI are as follows. Number one, compulsory market makers to provide liquidity, and settlement period of OTCI is 1 week. Okay, now let's talk about the famous one, that is the Securities Exchange Board of India, that is SEBI. Now why we are talking about the SEBI? Now see, whenever we are dealing in the financial market, okay, be you are borrower or lender, okay, whether you are purchasing or selling, some kind of scams, some kind of frauds are always there. Okay, so SEBI is actually a body to regulate that the healthy development in the stock market is achieved, and whatever the transactions are there, they are completely transparent, and nobody is doing any kind of scam and fraudulent activities. Now the objectives of SEBI. Now it protects the interest of investors, okay, and it promotes and develop stock exchange dealings, and it regulates the dealings. Now we have already seen that there was a cheat fund Ghodala also, isn't it? You must have known that, like Sharda, the famous one, the Sharda cheat fund Ghodala, okay, in West Bengal. So many agents, they committed suicide, okay, so many people, they were killed to death, okay, by the investors, because the company was dissolved. The company became insolvent, okay, so people's money were lost. So just to avoid such kind of incidences, okay, SEBI, it tries to protect the interest of investors, okay, and it promotes and develops stock exchange dealings, and it regulates the dealings. So now in the SEBI, okay, in the now in every company, SEBI is there. I mean, every company has to register with SEBI. Okay, so if no company is registered in the SEBI, then that company is not a reliable company to make the investment. Okay. Now the functions of SEBI are of three types: protective functions, and the developmental functions, okay, and regulatory functions. Okay, so just go through this point. Okay, so I'll be sending you this PDF also. Please refer to your textbook as well. So if there's any kind of confusion, please let me know in the WhatsApp. Okay, so I just made this video in hurry. Okay, maybe I couldn't explain much in great detail. However, there were many things to discuss in this video. Okay, so most probably I'll be making a second part of this video where I'll be discussing those points which I could not explain in this particular video. Okay, so thank you for watching this video. Okay, and I already know that if I make a long video, the students, they don't watch it. So thank you.